This is question time at Alhambra Investments. This is the day when we look at what's come in, what news we have, and kind of wrap things up for the week. And so, Joe and Steve, Joe, I'm going to start with you. Any big news this week? Anything that really jumped out at you
Other than the election?
other than the election? Yes.
No, not a lot of news this week on the economy front. You saw, well, I'll just run through them. Really, there wasn't a lot of data this week. There was ISM Services Index came in at 56, which is a really good number, up from 54.9 last month. That is, I think, reflected too. We saw earnings reports out of Expedia and Booking Holdings this week. The travel sites all reporting good demand for Christmas travel. And so I think that just continues that trend that we've seen of people consuming services versus consuming goods. That seems to be continuing. We got jobless claims this week, 221,000. That was up a little bit, but that's a number that is still very, very low. Productivity for the quarter came in at 2.2%. That came out of the GDP report. So 2.2% is not bad. It's down a little bit from where it was before 2.8, if you look at the numbers over the last year. But it's still a good number. We want to keep those numbers up closer to 3, but 2.2 is not bad. Unit labor costs were also out. That was up 1.9. That's still continuing to moderate, but still, if you're looking at the year-over-year number, still a little hot at 3 and change. That probably needs to come down a little bit. And the last thing we got this week was consumer sentiment, which, it's before the election when the poll was done, so I don't know that it really means all that much. It did go up a little bit, 73 versus 70 and a half, and the expectations piece went to 78 and a half from 74.1. But really, the news this week on the economy was really kind of benign. There's really nothing changed there. The employment situation didn't change. The consumption patterns hasn't changed. So I don't really see a whole lot of news there.
Steve, I know you watch it too. Anything on your list that popped out?
Well, yeah, just noise. I mean, I think the big story was the Federal Reserve Chairman saying he's not going to step down after nobody other than a reporter asked him if if he was going to resign or whatnot. So I kind of look at that as very dramatic, a great headline, but kind of a big nothing burger. The Fed cut a quarter point, and interest rates really haven't done much this week. So, no, I mean, some drama, some headlines, but mostly noise.
So, Joe, given all of that kind of a flat week in terms of reports and news and that sort of thing, what would you say to investors? Is there a reason to change anything at this point?
Well, I think it is interesting that we did have a Fed meeting this week where they cut a quarter, although I think they were uh, reading kind of between the lines. I think they're kind of saying, hey, we kind of need to see where things are going here. He was asked too at the press conference about, would the election change anything? And he said, well, we don't know what fiscal policy or anything is going to be. And I think that's a good way that everybody needs to think about this. We don't know what's going to happen. And I would say too that the market told you that this week. It's kind of interesting. Stocks obviously had a good week, and there was a lot of kind of cross currents in the market where things that are considered to be kind of Trump, I don't know, Trump favorables, I guess. Geo Group, a private prison group, had a great week. It's one of the best performing stocks in the S&P 500 because they run facilities that hold immigrants that are being deported or whatever, or being held for other reasons too, I suppose, while they're waiting for hearings and so forth. So that got a big jump this week. Well, I guess that makes sense. But if you look at the bond market actually said nothing changed this week. It's very interesting. The 10-year Treasury note yield actually fell 6 basis points on the week. It was up 17 basis points the day of the day that after the election when the results were known, but that just faded the whole rest of the week, meaning that really nothing's changed here. Look at the market indicators of what's expected of the economy, and nominal 10-year bond yields are essentially unchanged. Down 6 basis points means nothing. Tips yields in the 10-year were down 6 basis points as well as of yesterday. I'm not sure what they're doing today. So there's not a lot of movement as far as inflation expectations. The dollar was up some this week, up 0.7, but I don't know that that's all that unusual. considering that the Trump administration has talked about tariffs. So I guess what I'm saying is, we talked about this earlier in the week. You got it. There's going to be a lot of noise over the next couple of months, and so you got to try to tune the noise out and pay attention to the things that matter. I wouldn't go chasing stocks here. I mean, we bought a few things this week, but it was part of a regular rebalance that we were doing. And actually it was kind of neutral as far as our total exposure. So like I said, yeah, don't do anything rash, because there's nothing in the market indicators of the economy that says there's going to be some boom or some bad thing happen. Neither one of those things is evident in what happened this week. You got to be really careful about moving on things that are happening short term. I would just say that the moving stocks, I don't know. I'm a little torn about that. I mean, the market is very expensive here. You didn't get any confirmation from the bond market about growth, and people are buying like it's going to be a boom. And I'm a little skeptical of that. We didn't even get that in the last time Trump was president, really. So I'm not sure what to do about that. But my suggestion is take your time here. You don't want to be rushing into anything.
Yep. So do your homework, stay informed, wait and see. Great advice. All right, guys. Thanks. We will see you on Monday.